Hello traders and welcome to BCI's Evening Market Outlook. Let's take a look at how the markets have moved throughout the day and what key developments are shaping sentiment heading into tomorrow. First up, let's talk a bit about the US economy. Risk assets rallied today following news of a pause in the US-China trade war, pushing 10-year Treasury yields above 4.45%. This reflects reduced fears of a trade-driven recession and a pullback in expectations for near-term Fed rate cuts. While a 90-day tariff pause provides temporary relief, recession risks still linger, with market participants pricing a 50% chance of a downturn. The rally in yields has been driven by rising real yields, not inflation. In fact, long-term inflation expectations remain anchored, helped by softer oil prices. One standout metric today is the term premium, which has jumped plus 60 basis points, up from negative levels a year ago. This signals growing investor demand for compensation and fiscal uncertainty and increasing concerns around the US debt levels. Next up, let's talk a bit about WTI, crude oil. Crude continued to face pressure, slipping towards the 61.65 mark in Asian session. The sell-off follows an unexpected increase in US crude inventories, raising fresh concerns about oversupply in the market, which is already bracing for higher exports from OPEC. The group plans to ramp up production by 411,000 barrels per day in May, which adds to existing inventory worries. Meanwhile, a stronger US dollar driven by improved global risk sentiment has further weighed on oil prices. A stronger dollar typically makes oil more expensive for non-dollar buyers, adding another layer of pressure. Overall, the combination of rising supply and weak demand signals and a firm dollar continues to hold oil in a bearish pattern. Lastly, let's talk a bit about gold, which extended its recent correction, falling below $3,200 overnight, which is a 9% drop from its highs of $3,500 last month. While short-term sentiment remains weak due to easing trade tensions and improved market risk appetite, gold's longer-term outlook is still constructive. Persistent inflation, slowing US growth, and a softer dollar outlook are expected to support gold in the coming months. The Fed is likely to remain on hold with growing expectations for rate cuts this summer. This environment, combined with continued demand for safe haven assets, keeps the bullish case for gold intact despite near-term volatility. That's it for today's market wrap-up. Join us again tomorrow for the latest updates on macro events, market movements, and what to expect next. Thanks for tuning in. Manage your risk, and as always, happy trading.